It's Brian Preston, the Money Guy.
All right. Boston has a question. My wife might be selling her business and getting a substantial amount, $5 million plus it's looking like.
Ooh.
She is not feeling comfortable dumping it all into the stock market because it's not long term. The proceeds might be used for real estate, starting a new business, home upgrades, like they might want to use some of it in the future, maybe less than 5 years from now. So what should they do with it? What do you do when you get a big windfall like that?
Boston. By the way, this is not unusual. We deal with this all the time.
A lot.
I mean, it's not uncommon when you get these big windfalls. By the way, you're going to find out very quickly you have a big business partner. It's called our federal government. They're involved in this transaction.
Yeah.
They're also going to
Yeah,
celebrate the sale of Boston's wife's business sale because they're going to get a big chunk of it. So you have to first take that into account of what are the actual net proceeds. And then I'm going to challenge you. Be careful because this is one of those things where you might need to take the relationship to the next level. Because I think clients are amazed when there's some crazy quirky things in the tax code. Not that we're tax preparers, but we work with a lot of CPAs, and we can help talk through discussions of potential opportunities with small business exclusions and other things like that. That maybe your wife is structured that way.
Sure.
I mean, we can talk through that. But it's one of those things, it's not uncommon that when you get this windfall that you're going to think about, do we go buy a bigger house? We want to, because there's always been dreams, or maybe we want to do that second house, that mountain house. I just came back from a catamaran cruise. So maybe you're one of those people that thinks you're going to go, be the captain of the boat and your spouse is going to be the chef and y'all going to, take people all over the Caribbean. And I don't know. But here's the thing that I always want to make sure. You better make sure, because this is life-changing money. It really is. When you have this type of windfall coming your way, you need to make sure that you are measuring twice, cutting once on all decisions. First of all, you don't have to get in a hurry on investing it, because we're probably going to tell you on that large sum of money, you're going to want to dollar cost average it just to moderate the potential in a dynamic way. I'll say that in a dynamic way, you'll want to dollar cost average it that takes into account what's going on. So, but you need to have life figure it built into that too, because yes, maybe you're putting money aside for starting the business. Maybe you're thinking about buying this big house down on the beach in Florida or something like that. But the problem is that decision actually going to be good 15, 20 years from now? Sure. You better have somebody who is helping you walk through that. You're the CEO, you and your spouse are the CEO that made the decisions to get this windfall. But wouldn't it be nice to have a CFO that's not doing this for the first time, but doing it for hundreds of times, so that you can make sure there's no blind spots that you're kind of missing. I hate that I answered that with, kind of a pitch that you might need to work with somebody, because it sounds like you're trying to sell something. But reality, it's to help you make sure what are you missing in this once-in-a-lifetime opportunity, so that you actually come out on the other side in a really good place.
I agree. Step one, consider taking the rest to the next level. I think that can add a ton of value. I'll give you just some tactical things to think about. You already mentioned it. You got to figure out your taxes. Like, what's for the taxation going to be on this business sale? When is that tax going to be due? Take that cash, take that chunk, put that somewhere. High yield, safe, guaranteed rate of return type deal until you got to make that tax payment. For the rest of the proceeds, I think you got to chunk it out, right? You said a few things. Maybe we want to invest in real estate. Maybe we want to do some personal purchases. I think you have to have a realistic timeline of how dollars will be used. If you know that some portion of that's going to be used inside the next 4 to 5 years, I think that needs to be even off the table from an investing standpoint. If you know you're going to buy a piece of real estate 5 years from now, take that chunk, put it in cash, high yield, go buy something, CD, treasury, whatever. Earn some interest on that, but don't put it at risk. The only part of this you ought to be thinking about implementing that dollar cost averaging plan are the parts you know that can be working for you for the next 5 years plus, because we don't know what the market's going to do over the next 5 years. If you know you're going to do real estate, or if you know you're going to do a purchase, you know you're going to do XYZ, chunk those out. So oftentimes, if we have someone sell a business, whether it's $1 million sale, a $10 million sale, or even a $100 million sale, we chunk out portions of capital. And there may be some portion that's unknown. Hey, I think I want to do real estate, but I'm not sure. Okay, great. We're going to put that in this account over here. It's going to sit there. It's going to stay liquid. What realistically may happen is 10, 12, 15 months down the road, you decide, I don't want to do real estate. I thought I wanted to. I just want to get that working into the market. Great, you can redeploy that into the market at that point in time. But I think categorizing the different blocks of money will help you approach how to make those decisions. And the last thing I'll throw out there, when it comes to big sums, whether it's selling a business, inheritance, windfall, whatever it is, don't fall into the trap that you have to do something quickly and immediately. We get scared when we have that much money in our accounts, and it's very easy for someone to come in and sell you something perhaps you don't need. Oftentimes, you don't have to move that quickly. Take your time, slow down, approach the decision process rationally, and don't rush into something you may regret.
Well, and this ties into it, but this is some guidance I share with people. When you come into large sums like this, realize we talk about hedonic treadmill all the time. Bad decisions you want to group. Good things, meaning positive things in your life, you want to spread out.
That's right.
So if you do, or if some of this money is falling to personal things that you're buying, whether it's a bigger house, maybe nicer cars, vacation property, spread it out.
Yep.
I mean, it breaks my heart when I see somebody come into large sums of money and they feel like, you know what, this year, let's go buy the vacation house. Let's go buy the new cars. Let's go do this. Let's go do this. Because you're going to be surprised at the capacity of the human ability to just absorb stuff and then want to know what's next.
Yep.
I mean, we have an insatiable appetite. So try to tie into the way we are built to where you can really prolong that happiness and fulfillment, because this is something to be celebrated. Congratulations to you and your wife, because good for her for growing a business that's obviously has a lot of value, and so y'all celebrate that moment, but also make really smart decisions on how you process that so it turns into a really positive thing. Because you hear about the lottery winners, not that this is definitely different than a lottery, but that is the mistake that a lot of lottery people do, is that they go and they just consume without really figuring out, and then you're going to realize that doesn't work well.